Welcome back. We are on the floor of the New York Stock Exchange. It's a Tuesday morning, and this moment we are seeing the index is all in the green, but we are talking about the market today with my guest. As you can see, is Mark Otto, designated market maker at Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, we are up again today, and the push is coming from technology. We are seeing good earnings, even though economy is still worrying a little bit.
Yeah, it certainly is, but it seems though today we're struggling off a lot of bad data. I mean, flash PMI out of China, German PMI, even here in the United States. However, I think the catalyst for today's move to the upside is certainly Europe. Corporate earnings in Europe are actually looking better. And the fact of the matter is, it seems as though Spain and France are anticipating getting more time to reach their budget deficits. It's supposed to be 3% of GDP by 2014. On May 29th, EU leaders will meet to see if they're going to give them more time.
As you were saying, earnings in Europe, but earnings here in the United States, so far over 70% of the companies who have already published their earnings have beaten expectation, but for the net income. But we have seen the same trend that we saw last quarter. Revenues are just disappointing.
Yeah, it seems as though if they jump on the EPS, that low hurdle, it's enough. One negates the other. And then their forward-looking forecasts are sometimes hard to figure out what the hell they're saying. So I think that a lot of people don't look at earnings as much of a catalyst as, you know, they just don't want to hear bad news from them.
A catalyst, though, could be Apple tonight. A lot of people, as we know, have been speculating in the last couple of weeks that the earnings will disappoint investors. And a lot of other people are saying that anyway, even though the earnings might disappoint investors, Apple can come out with some sort of announcement to counterbalance that. Either way, do you really think that Apple could be a catalyst tomorrow, at least for technology?
Well, I can't go stock specific and give an opinion on things. However, that is sort of like the elephant in the room. If you're talking about earnings, you know, everyone's going to be tuning in. Everyone's going to be watching. It's definitely going to have an impact on that sector one way or another in technologies, which is actually moving on the upside today. So, you know, we're just going to have to wait and see. It's definitely going to be a drum roll on that one.
Yeah. And of course, as we already said already, you know, in the last couple of weeks, during the earnings season, we are seeing sector by sector. Like yesterday, we saw certain sectors moving the market, and were like sector that we had earnings from. So in this sense, of course, technology is going to be a big point tomorrow. Let's go back to the economy. This week, big numbers here in the United States. We have the GDP on Friday. If that disappoints, really, the market will ask for help again from Bernanke.
It certainly seems like it could set the playing field for that. Again, that's a big piece of data for this week. You know, we've been struggling off negative macroeconomic data, and it seems as though, you know, bad economic data that's reported as far as PMI from across the globe today might be seen as a reason to stimulate economies. Like in Europe this morning, you know, we're reading news reports that the era of austerity has come to an end, is one of the quotes that I saw, and I think that really sparked
And
the
the
market.
QE might come, right?
Absolutely, they haven't used the word stimulus yet, but however, you know, many people are anticipating a rate cut. We're seeing a fluctuation in currencies because of that. You know, Japan's done what they can to stimulate their economy and knock down the yen. So if Europe or the Eurozone follows that same suit, it's one of Japan's biggest customers. We could actually see currency fluctuation going forward, certainly as far as the yen versus the euro. The euro, again, is weakening today. The yen is strengthening because of that. So that's something to keep an eye on going forward.
Especially because G20 during the weekend just refrained from addressing the issue, addressing, you know, the Bank of Japan intention of stimulating the economy, like kind of like is a yes from the rest of the world, right?
Yeah, it seemed like that was a sort of a green light for Japan to follow through with the $1.4 trillion in stimulus like they're going to do over the course of the next 2 years. So their economy is about a third of the United States, so it really, you know, magnifies that number.
Now give me some numbers for the S&P 500. What are you looking at this week?
It's amazing. We've been snapping through S&P resistance levels like twigs. It's been ridiculous since last week. We were on the downside at 1537, approaching the 50-day moving average of 1533. Since then, particularly today, we snapped through several resistance levels on the upside. So it seems though the market's feeding on itself. Perhaps there's a lot of short covering going on out there. That's something that a lot of traders are speculating. But at 1576 right now, 1582. And then 1589, then the high is going to be right there on the doorstep again, 1597. So we'll have to see going forward. They say this may sway, sell in May and go away. This might be a different time and place. I mean, the market seems very resilient.
And it has proved in the last few months, I would say, not even few weeks. And it's so interesting because we have seen the S&P 500 having troubles to go above the 1560 for so many weeks. And today, in one moment, they just went through it.
Absolutely. I think that it really goes back to if Europe is changing their policy as far as the Eurozone is concerned, and it is an end of austerity, which many people thought shrank economies so that they actually couldn't progress and go forward. A new game plan is what everyone's been looking for a while.
We'll see. Thank you very much, Mark, for being with us.
Thank you.
And thank you very much for listening.